Hi there, good afternoon, and you've tuned into ET Now. This is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. And remember, viewers, this is a show where we get you all the stocks that are buzzing in trade. For the next 1 hour, we'll get you all the top buzzers. But firstly, let's put the spotlight on Adani Enterprises because that particular counter definitely is buzzing in trade. And this is Sports is Q2 results. But what has aided the Q2 numbers? Let's go across to my colleague Sharad, who's done all the number crunching for this particular company. And Sharad, take it away.
Well, a strong operational update coming in for Adani Enterprises and the entire focus in the new core infra business. And of course, if you look at it, the main reason for the growth and the stability is coming in is from these two new businesses. The first one is, of course, the airports businesses. And the second business, if you look at it, is the green hydrogen related manufacturing businesses. Now, looking at the numbers, the overall basis, the EBITDA has jumped almost 39% on a year-on-year basis. That's roughly almost 3,000 odd crore rupees. And the new core infra business, that has actually drove the profits, and almost half of it is coming from this segment. Also importantly, looking at the numbers, the EBITDA has been powered by the new emerging business, which has shown a good progress, and the net profit, however, did see a decline, and this is coming in on behalf of higher taxes and other expenses as well. Now, we did look at the numbers also. If you look at the airports numbers, the revenues there, that has jumped almost 49%, and even an EBITDA jump has been there of 15 odd %. However, if you look at the coal business, that has been impacted both the EBITDA front as well as the revenue front because of lower coal prices and the volumes impact as well. But the green hydrogen business, that has done really well, and more than 600 megawatts of solar power selling has been there. Also under the new industries vertical, if you look at it, the company has actually been selling and manufacturing these solar modules. Lastly, apart from the airport business itself, the IRM business which is there, that has actually also grown, and which is the coal trading business if you look at it, and even the other mining services, they have also done a decent kind of a growth coming in on a year-on-year basis. So overall, the new core business has performed exceptionally well for the airports business and the green hydrogen.
Okay, Sharad, thank you so much for that. Keeping an eye out on Adani Enterprises. As of now, the stock is holding on to gains of 0.8% in trade. But on that note, let's get started with all the other stocks that are buzzing in trade today as well. And to bring on board on the technicals, we have Swati Hotkar joining in with us, while from the research team, we have Ansh as well as Ashesha joining in with us. A very good afternoon to all three of you all. And I'm going to be starting the first stock that is in focus today. Let's talk about Kirloskar Oil Engines. This one is in focus on the back of its numbers. Nothing exciting came in terms of the numbers of the company. And when you look at it, we saw the revenues see a growth of only 6%, coming in at 1,304 crores. Profits of the company, that also saw a decline of around 78, I beg your pardon, a decline of around 7% came in at 78 crores. Other than that, when you're looking at it in terms of the operating performance, EBITDA saw a growth of 12%. Margins, a bit of an expansion coming in on that front as well, and EBITDA margins came in at 15.5% versus 14.7%. So yes, surely we are keeping an eye out on that one. We had also spoken to the management of the company, and what they are also highlighting is that they are on track to achieve the guidance of doubling their revenue by FY26. Furthermore, they're also saying that that they're seeing a reduction in volumes owing mainly to the emission norms. They're seeing improvement in employee retention, and overall the order book for the company is strong in terms of the power generation and industrial segment. But yes, seems like the decline in that profit number is not exciting the street. As of now, the stock is down 5.6%.
All right, next up, let's put the spotlight on Arvind Fashions, and that's actually buzzing in trade today. And also, it's an ET Now news break confirmed. Remember, we told you first about this particular deal, and now it has transpired. They have entered into a share purchase agreement with Reliance Beauty Personal Care Unit, Reliance Retail Ventures, and the deal is for the enterprise value of 216 crore rupees. What the entire deal is all about is the fact that Arvind Fashions will sell its unit Arvind Beauty Brands Retail to Reliance Retail for an amount of 99.02 crore rupees. That's the equity value, and this is as per the note to the exchanges. Also, the sale is valued at 216 crore rupees, including debt. Also, Arvind Beauty's sales, remember, in FY23 was at around 337 crore rupees, which accounted for about 7.6% of the parent's consolidated revenue. And post this particular announcement, the stock actually gained 11% or so, biggest intraday jump in a year. But right now, the stock is now settled around 7% gain. But yes, that's an ET Now news break confirmed, and we got you the story first.
Okay, ET Now Newsbreak confirmed for Arvind Fashions holding on to good gains over there. Let's move on and talk about a stock on the technicals. And Swati, the first stock that you've picked out for us today is ACC. Last 1 month, a bit of a decline that we've seen coming in on the stock. Do you think now we're going to see a turnaround for ACC on the charts?
Good afternoon, to all the panelists. Definitely the view on the technical front is a bit cautious as such. From the last few months, or say from the month of September itself, we are witnessing that the stock is trading in the low top slow bottom formation. Also, the interesting fact is that it is trading below all the important moving averages, say 300 and 200 EMA, which gives a very cautious sign on the technical front. As of now, 1900 is acting as a very strong resistance level provided by its 200 EMA. So, as long as it trades below that level, I believe that more selling pressure or the profit booking can be witnessed, and it might take a stock towards to retest with 1800 level. So the view is a bit cautious. Stay light on the long positions unless and until it doesn't give the breakout of 1900 levels. More upside cannot be seen in this particular counter.
All right, let's move on and let's talk about Concor. Ansh, this one is in focus on back of its earnings.
Yes, so the stock is up 3.5%. The company has reported a strong performance with revenue at 2,195 crore, reflecting a significant 10.5% increase on year-on-year basis. Company's profit stands at 363 crore, indicating a notable 23% growth compared to its previous year. Additionally, company's EBITDA is up by 8%. Now, despite of the strong performance, margins show a slight decrease, standing at 25% as compared to 25.5% a year back. Also, the board has declared second interim dividend for FY24 of 3 rupees per equity share. Now, if you see the chart of the stock has given a breakout from its downward sloping resistance trend line, and it has also surpassed its 50-day moving average.
Okay, keeping an eye out on Concor on the back of its numbers. Let's move on, talk about KPI Green Energy. Ashesha, this one is not an earnings candidate, but what is the news for you today?
Well, yes, a couple of news pieces in the stock, in fact, is sitting on with gains of nearly 6.5% as we speak. So the company yesterday informed the exchanges that they've won new orders for executing wind solar hybrid power project worth about 2.1 megawatt capacity. Remember, this has been received by Messrs Sundrops Private Limited, which is a wholly owned subsidiary of the company. So the company has now said that with the addition of this above mentioned order, their cumulative orders of wind solar hybrid power project now stand at about 198 megawatt. And they also say that company has, along with Advait Infratech, signed a memorandum of understanding with the government of Uttarakhand for development of 500 megawatt solar park. So on the back of two separate order wins that have come through, the stock is gaining in trade today, 6.2% higher in trade as we speak.
Right, and not just that, flashing on the bottom of the screen, another order win coming in for KPI Green Energy, actually Ashesha, and the stock now is trading higher by about 6% on back of the fresh order win, as that's flashing on the bottom of your screen. But Swati, coming to you, Purvankara, real estate company, we know what's happening to all the real estate stocks, but Purvankara, do you think this will be able to actually scale much higher than the rest of the pack?
Yes, definitely we have seen that the reality counters has not yet given much performance in this particular rally, in the last rally. But Purvankara, if you look towards a chart on a larger degree, say from the 2017 towards the 2033 levels, the monthly chart is just showing us very strong breakout of a triple resistance levels, which comes to at around 150 levels, and it's on the verge of giving the breakout very soon. I believe that a massive breakout is going to come into this particular counter, and which might take a stocks towards 200 levels, whereas on the downside 125, 120 is acting as a very crucial support level. So those who are looking for the reality counter into the mid caps, one can definitely go for a long positions, because the multi-year breakout is we are going to witness in the very few coming trading sessions, looking for a target of 200 rupees on higher side.
Okay, let's move on to the next stock and talk about Max Estates. Why is this one in focus and buzzing away in trade? Because we have a note from Ambit Capital where they are saying that the real estate developer Max Estate is actually to benefit from the continued consolidation in the NCR region. Now they've initiated coverage on the company. They've been given a buy rating, target price of 375 rupees per share. They say what they're highlighting is that obviously in terms of the reduction in developers in the NCR is to lead to a large grade A developers scaling up 4 times to 5 times and implying a market share gain for branded as well as organized developers as well. Other than that, Max Estates too became a credible developer in the NCR region in the coming decade on multiple asset classes offering as well as conglomerate Max Group brand also that is there. So lease up of projects for Max Square and Max House is something that could drive 29% of the revenue compounded annual growth for the company over FY23 to FY26. That's a word coming in from Ambit, and we've seen the stock is buzzing away in trade. At one point of time, it was up as much as 3.9 to 4% in trade as well. Currently also holding on to gains of 3%.
All right, that is Max Estates for you. Swati, coming to you. Granules, how is this one looking on the charts?
Yes, this is also the one of the most very good charts we are forming. We are getting to see into the formation on the weekly chart. There are the two technical setups on the positive side. One is that on the weekly chart, the stock has just formed the symmetrical triangle formation, and on the line chart, it has already given the breakout. Also, the interesting fact, if you look towards the line chart of the weekly chart itself, it's just showing a cup and handle formation. It's on the verge of giving the breakout, which comes to at around 350 to 350 levels on the closing. So I believe these two patterns are really doing very well on the weekly chart. So on a higher degree, I believe that the stock has a very strong potential to reach up to 400 and 420 levels. As long as on a downside, 320 will act as a very crucial support provided by its downward sloping trend line. So one can go for a long position at the current market price as well. The target will be at around 400 levels and 420 on the higher side, whereas the stop loss can be kept at 320.
All right, let's move on and let's take the next stock that is in focus, and that is Raymond for you. And Raymond actually saw a sharp up move, as you can see on your screen, 3.8% uptick coming in for Raymond. Raymond Group is looking to buy or will be buying majority stake in automotive firm, many precision products, for a near about $82 million. In the deal marks actually the foray of the company into aerospace defense as well as EV components business. They've said that they forayed into the sunrise sectors of aerospace, defense and EV components. But not just that, we spoke to the management a short while ago in an exclusive interaction. They spoke about this particular acquisition, what it means for them, what it will do to the business, synergies that they are seeing. Listen in.
The theme of the Raymond Group is that we want to stay in businesses where we have a scale and a size. Unless until we have a scale and a size, it is very difficult to create truly the shareholder value. So now with this foray, what we have got into a sunrise sector like aerospace, defense, and we have created a scale, and our demonstrated performance has shown that we are an operator who is able to reduce cost, reduce working capital, deleverage the balance sheet, and at an appropriate time, we've shown the demerger road to enhance the shareholder value. That's the way forward we have for this business. So I believe that in a consolidated level, if I look at the total business over the next 4 to 5 years, we see very clearly very high teens on the revenue growth and 20% plus growth on the EBITDA. So currently based on FY22-23 numbers, I think our combined pro forma business is 220 crores of EBITDA, which if you do 20% plus compounding, I think we can be comfortably more than 450 crore of the EBITDA over the next 4.5, 5 years.
Okay, let's move on from the management of Raymond now. We will talk about Aurobindo Pharma on the charts then. And Swati, when you look at it, 6 months, last 6 months, good performance. We've seen around a 39-40% return. But specifically the last 1 month seems to be a bit subdued in terms of the move that we've seen coming in. What are the charts now indicating for Aurobindo Pharma? A bit more daunting that is expected? Or, one should expect a run-up coming in here?
Yes, you have rightly pointed out that already the stock has given a very huge rally from almost 500 levels to 900 level in the first half of 23. As of now, after the steep rally, we cannot deny the profit bookings at the higher level. The momentum indicators such as the RSI showing a negative divergence as well as a negative crossover from the overbought fund, which indicates that the profit booking can be seen at the higher level, and the same we are witnessing at the current market price also. At the CFP, the stock is trading below the 20 days moving average, which gives some sort of a cautious sign. I believe that the profit booking is likely to be seen in the coming few trading session, which might test the 800 levels on the downside. So one should try to book the profits at the current levels, or else they can hold on but maintain the strict stop loss of 835 levels, and one can go for a long position on every dips towards to 750 to 800 levels.
All right, moving on, Ansh, let's talk about Kalpataru Projects and why is this one in the spotlight?
So the company has reported their Q2 results, and they have recorded a 19% increase in revenue, reaching 4,518 crore. Company's profit is up by 4% to 89 crore as compared to 86 crore a year back. Furthermore, company's EBITDA also reaches 370 crore, which is up by 6%. However, margins have decreased to 8.2% as compared to previous year's 9.2%. Talking about order book, it stands at 47,040 crore, an increase of 22% on year-on-year basis, and the majority of this is from transmission and distribution segment, which constitutes to around 37% of the order book. Now, if we talk about the year-to-date orders for FY24, then we are seeing a secured order of around 12,178 crore, again majority from T&D segment of over 44%.
Okay, let's move on to the next one, and that is Swati, Bharat Forge. When you look at it, this stock has moved up from around those 750 levels in the last 6 months to around 1,000. Now at current 1,030, do you think it's still a good buy?
I will not suggest that it's a good buy at the current market price, because the risk reward ratio is not favorable. Already we have seen a very good kind of a rally from 850 to almost 1150 levels on the higher side. I believe that we are likely to witness more profit booking sessions, which might take the stock to 950 levels on the downside. So that area, 950,000 areas, will be a very good levels for the buying purposes, but not at the CMP. More positive momentum can be seen only once the stocks gives the breakout of 1080 level. That is the resistance level provided by its 50 DMA. So as long as this particular counter trades below 1080 level, one should remain cautious and should book the profits on every rise towards 1080.
All right, so that's the take coming in on Bharat Forge. Ashesha, Prism Johnson just came out with its earnings today. How are they?
Well, yes, very strong set of numbers, and the stock is holding up 4.5% higher in trade as we speak. Revenues have risen by about 9.5%. The company also said that revenue growth was on account of strong performance from across segments. EBITDA, meanwhile, has also seen an uptick of about 62%. It came in at 69 crores versus 42 crores same time last year. And margins have also expanded. We have seen margins come in at 4.1% versus 2.8% that the company reported same quarter last year. As far as internals are concerned, that too look pretty strong. Cement and clinker sales volumes grew by about 13% on a year-on-year basis, and Prism Cement's EBITDA per ton has also seen an uptick of a whopping 58%. So across the board, very good set of numbers, and the stock is sitting with gains of nearly 4.5%.
Let's move on to the next one on the charts. And Swati, you've picked out Infosys. You know, a lot of technical analysts are now actually picking up these large cap IT names. You've picked out Infosys for us. Do you see the story changing for Infosys now?
Yes, correctly you have pointed out that most of the analysts as of now keeping an eye on the IT factor, particularly on the Infosys, because this particular counter is just has given a positive crossover from the oversold zone. Whenever the
RS% margin saw a sharp expansion, 12.92% versus 7.8% on a year-on-year basis. Now, what was more interesting is that JLR EBIT at 7.3% versus 8.6% quarter-on-quarter basis. And what the margin management has actually done, that the JLR target for EBIT margin for FY24 is increased from 6% to around 8% is what they're expecting. JLR order book remained quite strong with over 1,68,000 client orders as well. But that increase in the JLR EBIT margin, the guidance for FY24 is what is keeping the stock mainly a bust today. And that is why an uptick of almost 2.2% as of now.
All right, before moving on to the next stock, what Swati is going to talk about, let's talk about Godfrey Phillips, because that particular stock is coming crashing down, 7% down to coming in for Godfrey Phillips as we speak. If you look at the numbers, they've come in. Actually, the operational performance is pretty dismal coming in for Godfrey Phillips on a year-on-year basis consolidated. If you look at the margins, sharp contraction, 19.3% versus 23.6% on a year-on-year basis. And you can see that reaction on your screen, 7.8% downtick coming in, now 8% for Godfrey Phillips. If you look at the profits, was flat on a year-on-year basis. It's coming at around 202 crore rupees as similar levels last year as well. The EBITDA is lower by about 7.1%. It's coming at around 224 crore rupees. However, the revenue, yes, has seen an uptick of as much as 13% on a year-on-year basis, whereas the operational performance, Vinny, pretty dismal coming in for Godfrey Phillips, right?
Absolutely, pretty dismal and very different from when you compare it to something like an ITC, right? In terms of ITC, cigarette business was not that bad. So yes, keeping an eye out on Godfrey Phillips, dismal set of numbers coming in for the company, sharp contraction in margins like Cheryl was mentioning. But let's move on to the next one. And Swati, L&T Finance is the stock that you've picked out for us on the charts. What are the charts now indicating for this?
I'm really positive on this particular counter because even though the market was falling, but the L&T Finance only has not yet given the breakdown of the 100 DM. It has just tested these, taking the support of 100 DM and again bouncing back on the higher side. It's trading in the height of higher bottom formation, but the most interesting point on the monthly chart is that this particular counter has just formed a flat pattern and it is on the verge of giving the breakout of the flat pattern, and also the important thing is that it's trading nearby its 52-week high, and more high we can going to see in this particular stock, which might take a L&T Finance towards to 150 level. So I believe the overall setup of technical setup is really good. One can go for a long position or hold their long position for a immediate target of 150. Support can be kept at 130.
Right, let's now just take a quick detour and talk about India's debut 50-year bond sale that was all set to come up today. And in fact, we have some more details with regards to that as to who are the subscribers. Also, my colleague Anurag Shah is here to tell us how the issuance of 50-year bond has shown the strength of the Indian economy. Anurag, over to you.
So 10,000 crore, India's first ever 50-year bond makes debut at 7.46% coupon and widely supported by demand from insurers and pension fund. We know that from very long, insurers were asking for this 50-year long-term bond, and because life insurers especially wanted to meet the gap between the long-term assets and liabilities. So this long-term bond has been got response today and made the debut at 7.46%. So as per the expert also, the 50-year bond show the strength and positive outlook of the Indian economy, and long-term bond will serve the requirement of safe asset, especially if we talk about the life insurers to match the specific long-term liabilities. And from the cash flow of the coupon rate, the bond will match the outflow toward the annuity payment, especially for the pension product. So that was a demand of life insurers. And if we talk about the India is among the very few country which has issued this long-term 50-year bond. US has also sold a 50-year treasury note not after 1911, so it's more than 100 years as per S&P Global. And France and UK are the two countries which has issued a 50-year bond in past. So it's a very big development as concerned to the bond market, that the coupon of 7.46%, the government bond which will have a maturity of 2073 got debuted today.
Thank you so much for that, Anurag, for getting us those details on that debut 50-year bond. But let's move on and let's get back to stock market then once again and talk about stocks that are in focus. M&M Financial. Let's take a look at what that stock is doing in today's trading session. Because last time I checked, the stock was trading higher by about 2.5% or so. Right now, let's just see where the stock is at, around 3% uptick. The company came out with its operational performance for the month of October, and they said that the collection efficiency for October stood at around 94% versus 91% a year ago. They said that their liquidity position was comfortable with a chest of over 2.5 months. They also said that their overall disbursements in the month of October was at around 5,250 crore rupees, which is a similar level of from last year. But if you look at the plus point or the positive point in all of it is the collection efficiency, which has increased compared to last year, 94% versus 91% in the stock. As you can see it on your screen, trading higher by approximately 3% as we speak.
Okay, that's the operational performance, and on the back of news flows. But Swati, on the charts, do you think this run-up that we're seeing today will continue for the company?
Yes, as of now, we have seen a positive momentum in this particular stock. The stock is almost up by 3%. It has just formed a very cluster support nearby 240 level. So as long as it holds the same support level 240, we are likely to witness some bounce back rally, which might get a stock towards 280 levels. I will not initiate a major long positions, but yes, definitely one can hold their long position with a trailing stop loss of the 245 to 40 levels, and we can look forward for a target of 280 in the few coming months.
All right, so that's the take coming in on M&M Financial. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss. Don't go anywhere.